Thank you very much. I'm going to try to do my questions from the phone. So I'm not checking Twitter, but you guys are more than welcome to. The hashtag is FPShow 2019. And just to get the elephant out of the room very quickly, this is actually no surgery. The panel didn't beat me up when we were discussing the questions and what order to ask them in. So we'll go straight on to the first question. I'm going to point it at you, Jamie. So as we were putting the session together, it became obvious that the title Complex Resi meant different things to different people. How would you define it, and what precisely deems a deal or client complex?
I think that, hi everyone as well, I think that complex income, that we could probably all ask everyone in the audience and we'd all have a slightly different take and view on it. I believe that when I'm looking at complex income, it's about varied income, so where you've got it from multiple sources. Maybe it's not just the self-employment anymore, where it's salary and dividends. You're getting paid by a different way by the accountant with your books. But also it's the rise of, say, zero-hour contracts, and it's how people are getting paid maybe on daily rate contracts. So, the employment's changing within the UK massively, and how employers are looking to do that and how to do precise mortgages. We see anything complex regarding self-employment, 0 hours, which you're allowed to, and we will look at, but we look at extra things on self-employment regarding if you are extrapolating money from your company accounts by the form of pension and director's pension contributions, so we use that as income. So complex income is just basically when it's not just the norm of PAYE income or normal self-employed income.
Okay.
Anything else other than that?
Okay, good.
And yeah, I mean, you hit the nail on the head there, really. It's just complex being anything that's outside of the norm. So somebody that couldn't walk into any high street bank or lender and get the required funds. So as you say, income, but also complex requirements from somebody. For example, if somebody is on a low basic salary and high bonus income, they might want an interest-only mortgage for cash flow purposes, or just different requirements they might have that could be outside of the norm, whether that is the income, their requirements, or even the properties that they're looking to buy. Maybe it's got large acreage or commercial elements on the property. Just literally anything outside the norm.
I guess obviously as a broker you'd see it in a completely different way as to some of your lender colleagues sat here. So we've heard it from Precise's mouth. How does it look at HTB?
Yeah, well, I guess the very fact that we're asking this question, complex by its very nature means that it, as you said, falls outside the norm. So it is very hard to define. I guess looking at it from a lender's point of view and almost taking a step back from the client perspective is when you look at all the specialist lenders who lend into the complex market, typically it's a business model that requires expert manual underwriters. So it's a business model that has, rather than having a computer making a credit score or making a decision, you have manual underwriters sitting there behind and looking at the cases. And I guess the complexity can come in multiple guises. It can be a complex customer or complex borrower, or it can be a complex transaction structure, or it can be a complex property type. And each of those things can be layered on top of each other. So you can have HMOs into LLPs or into limited companies to foreign nationals and expats or self-employed. And it's just looking at all those different lenses of all the things that require human underwriters to assess the deals.
Okay. And Ian, Lendinvest, the newest in the buy-to-let space, lender-wise.
Yeah.
How does it look in your world?
I'm kind of going to echo what's been said, really, sort of inevitably, kind of at this point. But I'd define complex resi investment, I'd define as being either about the borrower or about the property. So if it's about the borrower, it's a professional landlord. It's somebody that's doing it for a living or in a limited company structure, as opposed to a borrower in residential investment that's investing to supplement their pension income, for example. So if it's about the borrower, it's about a professional landlord, somebody that's actually doing that as a lifestyle choice rather than just an investment choice. And if it's about the property, then it's a more complex property type, which, as Charles said, could be aligned to an HMO or a multi-unit freehold or a non-standard non-standard construction or non-standard property. So a flat above something, a flat above commercial, as opposed to a vanilla terraced house. Yeah. So for me, complex is either about the borrower or it's about the property, and it'll fit neatly into one of those boxes.
Okay.
So that's how I define it.
A quick show of hands then. Who would view a HMO as being complex? Is that a difficult deal to place from a broker's point of view? Is that complex? Is that fair to say? Quick show of hands. Okay. Any burning questions for the panel on that particular subject? No? That's good. Fantastic. We'll try and do the Q&A as we go along, I think, just so that we're talking about it as the subjects are hot in your minds. So doing my a very antisocial iPhone thing just now, we're going to move on to income. This is a factor which lenders seem to have evolving attitudes towards. How do you see this changing and meeting borrowers' needs and increasingly varied earning structures? Chris?
Yeah, so income's always complex. I mean, if you look at the buy-to-let portion of the residential property, it's quite simple, with a lot of lenders not having any income requirements whatsoever, or minimum income to say 25,000. But so I say that this is more on the residential side of things. So lenders are becoming a lot more bespoke in what they offer these days. Whereas previously it might have been just a computer system saying yes or no, or automatically requesting things. A lot more lenders are opening up things like large loans teams or bespoke arms of their companies. For example, Bank of Ireland have a bespoke arm, Skipton, Santander have a large loans team, as well as Halifax and NatWest. So it's gone back in some instances to a more manual underwriting process. So different income types are definitely more catered for than they used to be. For example, now if you're a contractor, say a day rate contractor, if you look back a few years ago, it might have been tougher to get a mortgage, and it might have been based on what you've declared as income on your SA 302s, for example. But now there's a lot of lenders, and it's quite easy to get lending for a day rate contractor just based on their day rate times by a certain multiple. So I feel like lenders are looking of how to help a client rather than more of a computer says no when it turns to income.
Okay, Charles?
Yeah, so obviously HTB is primarily, well, almost 100% focused on the buy-to-let market. So as Chris said, income tends to be lower down the list in terms of how we would assess deals. That being said, and we have no minimum income standards for our buy-to-let customers or borrowers. But it is worth pointing out that when you look at the complex deals, we need to change our criteria depending on the deal. So if, for example, and we were just looking at a deal quite recently, it was a large prime residential asset in central London where it was relatively low yielding, as you would expect these prime assets to be, and therefore the ICR was quite low. So that's the interest coverage ratio based on the rental income was quite low. So we wanted to be, and therefore the void risk, it's one of these, it was a big house in the centre of Kensington, so it's one of these properties that if the tenant moves out, the void, potentially you could have voids for up to 6 months. So we wanted to understand the income of the borrower behind that, so that his capacity to cover the void period. Equally, when we're looking at the actual property itself, obviously the rental flows off that property are quite important as well. So we will look at not just the rental income of that individual property, but the wider portfolio income. We'll also look at whether there's any ability to top slice across the portfolio. We'll also look at whether that rental flow from the wider portfolio is going into various different bodies, be it limited companies or offshore trusts, and look at how we can assess that and pull that income into the overall structure. So there is multiple ways of looking at the complex structures and the complex incomes, but then it all falls back to the fact that as any specialist lenders, we have a bulk of expert manual underwriters there who are able to, they've got a set of scales almost, that they're able to put all the pros on one side and all the cons on the other and weigh up the deal.
Okay, very good. Ian, anything different?
I think technology has to play a major part in this. We're a fintech lender, so we've and our buy-to-let lending will always want to assess income in a similar way to what Charles has outlined, in order to ensure that for longer-term lending across the whole portfolio, across the asset itself, that actually the borrower can sustain that mortgage through void periods or through whatever else. So complex income types have taken that into account. It does make it more challenging, more difficult, and I think that's where fintech and technology kind of plays a part for us. So we're utilising open banking, and the early results of that have been phenomenal, whereby if an applicant allows us to do it, allows us to trigger through to open banking and therefore view their transaction history, it really alleviates the need for us to ask for much stuff at all. So we didn't need to ask for bank statements. Very often we don't have to ask for income evidence at all because you can see it, and therefore we can just search the open banking data that we get through. Makes it far easier for the broker, makes it far easier for the borrower in providing documentation, and makes it much, much faster for us in getting through the assessment of the case and to offer. So we'll always want to assess it. Our underwriting team will always want to ensure that the applicant has enough income in the background to sustain the portfolio. And therefore it's about how we more easily do that through the use of technology.
I think technology, whilst it's there and it's evolving all the time, it's nowhere near the finished article. Open banking is a great start. And I guess from a lender's point of view, if your colleagues in credit have been given consent to utilise open banking, then that gives you a little bit more certainty about the borrower. They're not trying to hide anything. If they're being that open to you as a lender, that gives you a little bit more.
I think there'll be some natural fears around that. I think that's the market will go this way. The market will go through kind of use of technology and open banking. It'll become the norm kind of over time, but it's in its infancy. So there'll be some natural fears around that of actually I'm opening myself up for a lender to just look through all my transaction detail. But actually, there are quite a lot of controls around it of exactly what a lender can and can't see and how long they can see it for. You open up the window for a short period of time, not forever. There will be some natural fears, and I think there's probably a place for lenders to play in terms of educating and enabling brokers to be better informed in the use of that technology, so that brokers can better educate, for want of a better word, their clients, and therefore give their clients the confidence to use it, and therefore again the benefits of what I've described of less work, less documentary evidence, faster process.
It's still a key word as well, isn't it, Jamie? Education. We've been talking about that since you and I first got to know each other 8-9 years ago. Education is still key. So is there anything different than what the panel have already said?
Yeah, the thing actually is on that word education, but you'd expect Ian makes a great point, us helping educate brokers, which Precise do well, but I'd actually put it back on yourselves to educate us. So we know that income's changing, we know that buy-to-let has changed and become more complex. So that means that we've got to evolve as lenders. As an intermediary-only lender, I only evolve if you give feedback to my BDMs and tell us about the new areas that we need to be looking into, whether that be day rate contractors, whether that be top slicing, whether that be different types of income that we just need to be considering that's raising. And that's the only way that we'll evolve and then provide solutions to your customers. And then it doesn't become so niche, does it? And that's where the ever-changing market is with this residential affordability. That's how we grow as lenders. So I suppose that's the only thing to add on it. Education both ways.
Okay. Any questions from the floor on income? No? Okay. I think we're well on track here. I think we might finish within our half an hour allotted time. So the next question is aimed at Charles, and I think I know that this is going to be quite a broad answer. What is your approach to foreign borrower requirements? Is this sort of demand likely to be negatively or positively impacted on by Brexit?
Okay.
The first time today.
Yeah, I'm happy to. Actually, just parking that question for a moment. You go to many of these panels, and so many people say, "Oh, the B word. I don't want to talk about it. I'm ignoring about it," and that really annoys me. Why would you ignore?
I knew Charles was the right person for this question.
Why are people ignoring things which are, one of the biggest constitutional changes that is potentially going to happen in our country? By all means, it doesn't necessarily need to influence what you're going to do, but you shouldn't ignore it. You should at least look at the pros and cons and decide how you're going to navigate through it. Anyway, that's by
Charles
the by.
is running in the Wimbledon constituency for any of you that wanted to know, so you can vote for him at the upcoming general election.
So I think, we, over the last couple of years, have become increasingly, within the UK, you pick up the news, you watch the newspapers, and you are often with your head in your hands about the state that we are in as a country. But when you take a step back, it's just because we're in a negative spiral, but when you take a step back, we have an incredible country here, we have an incredible economy, and the property market is second to none. And the absolute certainty around title is found nowhere else in the world than you do have in the UK. The freehold system, the leasehold system, these are incredibly, incredibly important. And therefore, when you are a foreign investor earning your money outside of the UK and looking for somewhere to put your money, putting it in the UK is a cracking place to put it. So we are seeing a significant increase in foreign investment coming into the UK, and I believe 1 in 3 transactions within London over the last years have come from foreign investors.
You could say it's as safe as houses, couldn't you?
It is as safe as houses, you're absolutely right. Certainly safer than a bunch of houses built on the coastline in China. So we've got that sort of legal framework piece, and then the second piece is the deterioration in the value of sterling, which means as foreign investors, property's getting so much more cheaper bringing it in. So we are seeing a significant increase in foreign investment in terms of the demand for it, and our foreign investor numbers are going through the roof. We lend to foreign investors or expats in over 100 countries across the world, and again, it goes back to the manual underwriters, because we're able to look at every single deal and go, okay, how are we going to get to know our customer, get to know your customer, how are we going to get to know the incomes, how are we going to understand the fraud and financial crime risks, and then lend on the property.
Okay. Ian, Lendinvest, quite a relaxed
well, it's not
attitude?
a market. It's not a market for us. So we only lend to UK-based investors.
No foreign investors, right? Okay.
Yeah, we're looking at expats currently, so that will probably come in the early part of next year to lend buy-to-let to expats. But we lend to UK-based kind of landlords.
So just go straight on to Brexit then.
Just straight on to Brexit,
straight on to Brexit.
But I don't think it is about Brexit, actually. I think investors just get on with it.
Good.
Irrespective of that, I don't think we've seen that much market impact as a result of kind of that. I think landlords, professional landlords, investors sees opportunity. I think more of the market has been driven by some of the other changes that have come about for landlords, which has therefore moved more towards limited company structures and more towards professional portfolio ownership. So less landlords, more properties, rather than part-time kind of landlords. For foreign investors, I think the probably thing that that will drive that more to be seen as the UK as a good place to invest for property, as it is more actually driven around the exchange rate.
Yeah.
And obviously, in a current low exchange rate environment and low interest rate environment that we are in right now, this has got to be a prime place for foreign investors to look.
Okay, good answer.
Not a market for us, though.
Okay, that's good to know. So no foreign nationals at Lendinvest. Just for now. Jamie?
Well, we're similar to Ian that we will, the rules are the same whether it be this side of Brexit or the other side of Brexit, that we need someone living in the country for 3 years before we can entertain an application from them. When it comes down to sort of Brexit, I think it all comes down to consumer confidence, and we're still feeling that it's remaining really high. If I put it just down to the simple thoughts for myself, is that people either need to live in houses, either buying them or renting them. And we're still seeing that actually housing's not going to the target it needed to. So the 300,000 houses to be built has not come. And we've gone through 10 housing ministers, 9 in the last 10 years as well. So I think actually, if I did go towards a sort of political argument, I would say that housing needs to be taken out of the political sphere and actually made independent on a sort of 25-year plan. But regards to foreign investors, again, we won't accept them at this point in time. Within the wider OSB group, absolutely.
Okay, good. And through the broker's eyes?
So this is something we do quite a lot of, in honesty, both expats and foreign nationals. So it's an interesting subject. But with Brexit, I feel like it's dampened everything quite a lot in terms of house price growth not being that much in the last couple of years. And you touched on exchange rate changes, meaning that it can be quite an attractive proposition for somebody to invest in the UK, or specifically London as well, at the moment or over the last 6 months and the next 6 months. And we've seen a lot of interest from foreign buyers, especially from Hong Kong and Dubai, specifically, some from the US, and all over you get some people from crazy countries looking to invest in London. But I feel like there's a good demand for foreign investors, and as well even it just being a more attractive proposition for somebody that maybe works in Germany, comes to the UK 2 days a week, so maybe they get a pied-à-terre or something like that in London to reside there while they're going back and forth. Some people are seeing this as an opportune moment, and some people are leveraging Brexit to negotiate down house prices on the properties they're offering on. So,
okay. Has that provoked anything from the floor yet? There must be something on Brexit, surely. Nobody's got anything to say on the subject of Brexit. I'm absolutely amazed. Do you think I'm doing quite a good question time impersonation here? What's the lady called on BBC Question Time? What's she called? Fiona Bruce.
Fiona Bruce.
Think I could potentially stand in for her in the future? No, you're not convinced.
No, I don't think so.
You're not. No, I don't think so either. Okay, right. I've got one for you, Ian, and I think it'll be right up your street. So, again, new to the market, Lendinvest in terms of buy-to-let. How are investors being supported through the various legislation changes? Do you think there is sufficient finance options and advice available?
Finance options, yes. With the number of new entrant lenders, we've been in the market now for buy-to-let for 2 years, and that's going really, really well. We've been in the property investor market for the last 11 years, so it's a marketplace we know well. In terms of finance options, yeah, lots and lots of choice out there, and obviously in an ongoing low rate environment. I think probably the bigger need for the kind of landlord community is around the education, the help and the advice piece. And Jamie sort of talked about what Precise do on that, and they really do lead the way, in my view, in terms of the broker education that they do. But the industry itself, I think, can do far more for landlords, so it's something that we should do, particularly around, their landscape over the last few years has changed massively, hasn't it? So we've had all the tax changes come in, the stamp duty changes, the change of rules to HMOs, ongoing talk about how we improve standards for tenancies and what future what future changes that kind of might bring. And I think, their landscape has changed massively in the last few years. And I think, probably brokers play a part with your clients in helping landlords to navigate all of those changes, not just from a finance point of view, but to ensure that actually they're doing everything else in terms of the property that they should do. HMO licensing, for example, minimum room sizes, all that stuff. So brokers probably play a part in that, and certainly organisations like the NLA and the RLA do a lot within that space. But I think there's probably a big need in the market for us kind of collectively to do more. I don't know who that sits with. Maybe it does with lenders, maybe it is with the trade bodies, maybe it is with brokers, I don't know. But I think, if I was I am, but a professional kind of, if I was a portfolio landlord with a number of properties, didn't understand the finance bit of the market as well as we do, actually I'm not sure I'd know where to go to.
Okay, that's a good answer. I think it's the trade bodies, by the way. I think the trade bodies need to do more.
Yeah, it's probably right.
I think that's probably the...
But there's definitely a need for it.
I would say so, yeah. I'll mention that to Adam Tyler later. Charles, we'll work our way down.
Yeah, so, the professional portfolio, the professional landlord, the professional property investor has been a bit of a punch bag over the last few years, and from multiple aspects, from a taxation, fiscal point of view, from a commercial point of view, but also from an operational point of view, it's becoming increasingly difficult to run a large portfolio, and particularly when you're not just dealing with standard residential stock, when you're dealing with a more complex stock, and therefore the portfolio landlord and the professional landlord, which we deal almost exclusively with at HTB, are, if you go back 5-6 years ago, they could run their portfolio and they could kind of run their finance on the side of the desk because it was relatively straightforward. Now they're spending so much of their time out managing their portfolio. Tenants are a lot more demanding. The process of running portfolio is a lot more demanding. Therefore, they just don't have the time to run their finances on the side of their desk. So I think they are looking for the broker community, and it's a fantastic opportunity for you guys to go really demonstrate the value that you add to your landlords. It is more complex to get finance now, although the finance is there. There are bucket loads of lenders who want to lend money, but it is increasingly complex. So this is the perfect opportunity for yourself to get close to your clients, really demonstrate the value that you can add, and I think there's a real opportunity for intermediaries in here.
I think I know how your answer is roughly going to go.
Well, there's a lot of finance options available in the buy-to-let market. There's new lenders that come in. With a lot of people going for limited company buy-to-lets now, lenders are changing their policies and making it more flexible, competing on rates. There's a lot more options out there now from a finance point of view. But from an advice point of view, obviously, it's not just brokers' advice as well. It's tax advice, it's accountants. And a lot of the time, the tax advisors and the accountants won't they have to come to a mutual agreement because they don't quite agree with each other in how things should be done. But it's whether or not a client is willing to take that advice as well, because now limited company buy-to-lets, it's almost an assumed route for a lot of people. A lot of people are saying, now you just buy it as a limited company as it's more tax efficient, but not necessarily for everyone. Some people approach us and say, I want to transfer my current buy-to-lets into a limited company. And my answer to them, first of all, is always go seek some tax advice from a good tax advisor, because it's not necessarily the best thing for that person. And you might get somebody on very low income who's buying one buy-to-let property for like 100k or something like that, and they're like, let's go limited company. And they don't consider the costs involved with running a limited company. They don't consider the entire tax piece. So some people are unwilling to get that tax advice. I'd say there is a lot of advice, good advice out there, but you do have to seek it and find the right advisors, especially from a broking side as well. I speak to brokers outside of private finance who work for different companies or self-employed, and I talked to one the other day and they were asking for advice because they were doing their first limited company buy-to-let. I'm like, where have you been the last couple of years? So I think there is sort of training available for brokers, but really it's the experience of doing it over the last couple of years since limited company buy-to-lets sort of came more into the forefront of lending as well.
Just to go back to you on the 100k buy-to-let, they could buy 6 for about 90k in Sunderland. I think the recent house price data from the Land Reg said that the cheapest residential property sold yields as well, in September was £15,000 in Sunderland. So if anyone's looking for a cheap deal, you've got to go a bit further than Stoke these days, but Sunderland seems to be the market for a cheap property. Jamie?
Wow.
Well, Roger won't thank you for that because he buys most of his properties up in Sunderland. So it's a hot topic, isn't it? Buy-to-let used to be the easy side of the market. Now it's more complex. You're absolutely right. Finance is there. It's the education side of what's needed. I'm a landlord myself, and the first property that my first foray was go to the estate agents or go on to Rightmove or something like that. But now your first part should be to go to a tax advisor, and it shouldn't be dismissed that recent studies showed that 9 in 10 landlords who were studied haven't sought tax advice. So you're right, limited company may be the byword and may be an option for some, but it's definitely not the option for all. You remember that multiple guest thing that we did a few years ago called CMAP? There's a big section on tenants in common in there. Maybe that's the right structure of ownership going forward. There's multiple bits that we need to do now where I think as brokers yourselves, you can have a centre of influence around you, which could be the letting agent that you could be farming and helping business off, the legal advisors, the tax advisor themselves, the lender BDMs. If they're into your business, just selling rates, kick them out. They should be adding value to your business and showing you where it worked. We've moved on from 4 years ago. Limited company is now actually quite vanilla. It's actually the different types of limited company out there and how the lenders do it, whether that be trading limited company, layered limited companies, whether that be LLP schemes. There's lots of different areas that we need to now have focus. But that's only a good thing for you as brokers, really, because the more complex it gets, then the landlord can't just go on the website and actually think that's the rate that I want from Martin Lewis's website. They need you more than ever, and it's quite good news for the free lenders on panel here because the market's gone towards specialist lenders. This is what we live and breathe now.
Okay. Anything? Anyone? No? Still no questions? That means that you guys are doing a fantastic job, by the way, answering all of the things that's going through people's minds. We're on our last question. We've got 2 minutes, so it's short and concise answers, and we're going to go fastest finger first. So I'm going to ask the question. The person who puts his hand up first gets to go first, and then we'll wind it up very quickly thereafter. So, what trends is the panel seeing in this part of the market? The who, where, and what? Charles.
Yeah. I guess there's a move of professionalisation within the market, so landlords are becoming more professional. Again, plays into your hands because you'll be able to add value through the advice piece. And in terms of what we're actually seeing in terms of flows, an awful lot of foreign money coming into the UK and into London. In terms of geographical spread, we're seeing a lot in London and South East, as you would imagine. But equally, we're going into, people are looking to sweat the assets, so people are taking standard residential C3 properties, turning them into HMOs, possibly doing through short-term let via sort of Airbnb and things like that. So there's lots of people out there hunting for yield.
Okay, Airbnb is. You've got an appetite for that?
I love Airbnb.
Oh, fantastic! You've just taken my question as well, so we're definitely going to do the 30-minute thing here. I think 45 seconds, Chris.
Again, I touched on it earlier, the bespoking of mortgages, large loans teams, going back to a more manual underwrite then a computerized system, 4.5 times income, things like that. There's increased income multiples available, there's more affordability-based lending, and also on the technology. If you look back a few years ago, we sometimes see mortgages on a residential property go from application to offer within minutes these days, because they're online verifying the ID, online verifying the property prices, online verifying even to the income from HMRC data. So if you look back a few years, there's certain lenders that can instantly offer a mortgage now. And I feel like with technology, that's how it's going to go for the more vanilla lending. Then on the specialist side, there's so many specialist options that a lot of lenders are really helping the market there.
We're at 30 minutes, but Jamie?
Yeah, professionalisation, as Charles said, so the professional landlord, diversification of portfolios, so HMOs, multi-units, Airbnbs, holiday lets, all those areas that will help you with actually the PRA2 changes in the background to make sure your portfolio calculations fit as well. Actually, equity acceleration, so we haven't mentioned on this panel, Pritchard, refurb buy-to-lets, refurbing properties to get the most out of them and purchasing at auctions. Lots of options for you.
Okay. The last word is reserved for you, Ian.
I'd say the cars have gone in the pits now, haven't they? It sounded a bit like we were in Silverstone for most of the session beforehand, but they've just gone into the pits.
They've gone for lunch, haven't they? Yeah.
Which is good. I think there's three things happening in the market, and Jamie's alluded to them, but the one is the move to professional landlords. So I kind of said before, less landlords in the market, but more properties. So data from, I think it was Countrywide, did some surveys a few months ago and about the number of landlords and number of properties. There are now more buy-to-let properties in the market, but there's less landlords, so bigger portfolios. So definitely move to portfolio landlords, move to limited company structures for those. Jamie's right in terms of thinking about different tax structures, and clients not always doing that, but certainly a move to holding within limited company structures. And then the third one is asset types and adding value. So we're seeing a lot more that don't come into us as a buy-to-let, but come to us into us as bridging finance. And we have our own kind of a Lendinvest bridge to term proposition, which enables a client to come in for bridging finance, do either light or even heavy refurb and conversion, and then term it out onto buy-to-let. So we're seeing landlords a lot more in the marketplace trying to add value, because in a low price increase environment, you can't add value through market movement and maybe buying less below market value. You've got to add value through improvement to the property. So more coming in terms of bridge first, buy-to-let second.
Okay, holiday lets?
We see some holiday lets, yeah.
So 3 lenders there for your records, all for holiday lets. I think Charles might have the greater appetite for that. There you go. So you heard it here first. Listen, that's fantastic. Thanks very much, gents. Thank you very much as well in the audience for your support. You've not been too demanding, which makes it very, very easy for us up here. But thank you very much.